Okay, everyone, welcome back. We're going to get right into the stock market technical analysis, looking for profitable trade ideas. That's what this channel is all about. So if you guys are interested in, trade ideas using the technicals, then subscribe, like, leave a comment. And then as I'm going along, if you're finding value in the content, you want to join up on the private member group, feel free to do that. Link in the description below. It's $5 a month, so everything's affordable. And then I also have a technical analysis course where basically I've taken everything that I've learned over the many years and put that down into a course. It's priced affordable. Link in the description below on that one as well. Triple Qs, guys. So not much today. I can just tell you the market still feels like it's in kind of sleepy holiday mode. If I go down to the hourly, yes, we did sell off, but for the most part, it was kind of just a drift lower. It did not feel impulsive selling, kind of just that drift lower right now. So on triple Qs, I still don't have a clean read on this one. If I get down to the 15-minute chart, we've got this downward price channel. We've got some bullish divergence starting to show up. I don't know. I honestly still feels like it's kind of grinding around. We also have the Fed, Jerome Powell speaking on Wednesday. So there's an opportunity there for a catalyst and a market moving event. So the market's likely going to just kind of grind around before the Fed speaks. And that's really all I see on triple Qs. I mean, if I go to the daily here, you can see we're still in this kind of flagging price action right here. I mean, we've really gone nowhere since, over a week and a half or so. We're just kind of chopping around, and that's it. So I can't really put out a good read on the chart quite yet. I don't know if we've topped out or if we've got a little more upside to go. If we're going to go, to the upside, we've obviously have the recent highs at 291.70. And then this downtrend line right here, and that's your bear market trend line right there. Okay, 1, 2, 3 reactions. Maybe we get another one. Maybe we don't. It's a pretty obvious trend line. So if everyone's watching it, the sellers might step in early and they might start to sell it down now. But likely we'll need to wait till after Jerome Powell speaks on Wednesday to figure out if the market wants to pick a new direction. The SPY, same thing. You can see here on the S&P 500, basically resistance. We're looking at a daily chart resistance, and we're going nowhere right now, just kind of chopping around. So nothing I can really take a position on because it sells down, and the next day it grinds up and it sells down. So I need to see we need a better level, or we need to see some impulsive action. We need to see a sell signal. We need to see something. So in general, if it wants to rally, we have the 200-day right here. I suspect if they're going to rally it, they'll pop the 200, run it into that resistance line right up there around 411, and that would be an objective area to short at, and that's what I'd be looking to do if it did pop up to that area. So I can tell you that I'm interested in shorting right up here, but right here I just don't know. And then also there is some support here at about 390. A break of that, maybe we start to head lower. A break of that, as long as there's no divergences in place, could be a sell signal depending on if it's impulsive or not. So we're kind of in this range. We're range bound right now, and we're still in that range that we've been in for the last week and a half. We need the market to wake up, and until we see it, I'll probably just give kind of a light analysis on the indices. XLI is a little interesting. So XLI, this is your industrials. So coming off the all-time highs here on the daily, you can see resistance through here. All right, we broke out, but right ahead of kind of the holidays, broke out, back tested, continued running, and we started creating this trend line right here. But if I zoom in, you can see we started to put in that negative divergence, and it continued to remain intact. So these highs that we were making were divergent highs, and we did just break that trend line today. So it is a sell signal for sure. I don't expect it's going to really drop too much ahead of the Fed, but we do have a sell signal on this one. So at the moment, I'm interested in shorting this XLI on rallies into resistance because there's, that's your sell signal. That's pretty decent in terms of impulsive selling. Here's the daily chart. You can see a breakdown So if it wants to rally, right now I've got resistance. I've got a level right here at about $100. So rallies into resistance, I'd be interested in shorting until proven otherwise. The other thing is on the daily chart, this is your bear market downtrend line here. We're above it. I wouldn't want to go a full short position until we get back below this trend line. So as of right now, this is a divergent high on the daily that we just made. Just barely, basically, but it's there. And that's a divergent high here. And it's telling me that this breakout above this trend line here on the daily is likely going to fail. But until I see it, I don't want to be in a full short position. So I don't have any position in this one yet. I'm probably going to wait till after the Fed clears out. But, you know, again, rallies into resistance could be shorted, maybe with kind of a starting position. And then if we start to break this trend line right here, then that would be an indication we're probably going to go make another leg lower in this bear market. Okay, another interesting one, OXY. This is a oil energy stock. On the daily chart, you can see here as I roll out, let me kind of clean this chart up a little bit, but as I roll out, you'll see, right, kind of clean that up, roll out, you'll see this is your daily going all the way back to November of 2020. So this is basically when the energy bull rally started. Nobody wanted to buy oil stocks back here, but this is when I was buying them. Well, the rally's probably run its course, and it's likely due for a correction within an ongoing bull rally, but probably due for a correction. And let me tell you why, at least on this stock. You've got a nice clean trend line to watch. There's another tag of support, and you can see the last couple days we've just been kind of dancing on support without actually breaking. So no sell signal yet, but we definitely have negative divergence. It's been building for a while. You can see the momentum is clearly dropping off on each new high. We have less and less momentum on the daily chart. And we also have this bearish rising wedge pattern. So we have a bearish rising wedge. We have negative divergence. We're walking along support. And we're just waiting for that breakdown / sell signal. Okay. Today it gapped down, but it gapped down right to support and pretty much held there all day. So this level is relevant. That's why, that's basically why today we just traded right on it. A break of this trend line would be the sell signal, and then we'll probably have a decent sell-off. I would think over time, minimum target on this probably. Well, the minimum target, I guess, would be about this 54.30 with a target down here at 42.75. Okay, so minimum target would be about a 20% drop with maybe the potential of about a 30 to 40% drop. Okay, so that's what I have on that one. No sell signal yet. Looks like it's ready to go, but probably going to hold up until after the Fed. Gold. Okay, so this is gold bullion. Maybe a little more downside in gold. I'm just seeing a couple things I'll show you. We did have a breakout. So gold's been in a kind of this bear trend since March of this year. It's just been working its way lower. However, we did have a breakout and a buy signal recently. Big impulsive breakout right here. Okay, but now we're getting some of that pullback. I think probably a little more downside, maybe even the potential to run down to the 1680 again. For me, that would be a buy zone, and I'm looking to buy dips on gold, but maybe a little more downside here on gold. We've got downward momentum, and we have kind of downward price action. No divergences really, so I could see a little more downside. Gold futures here, sitting right there on support about 1740. Downward momentum. So yeah, again, maybe a spike down to some lower levels to put in a divergent low and then rally. The futures still, bigger picture, there's your downtrend line. We broke out, okay, so this is kind of it's a breakout and kind of correcting a little, and then I think we should continue higher over time, whether we have a little bit more downside or not. Ultimately, should go higher. So I'm looking to buy dips. I wasn't buying a whole lot today. I think, again, there might be a little more downside, but a couple things I was buying. So AG, bought some of that one, if I can find the right symbol. So on this one, daily chart, you've got, for one, you've got a messy chart, but two, I've got this trend line right here on the daily. Support, 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 and pretty much closing right there on support. So it's objective. And if it dips a little lower, maybe tomorrow intraday, maybe we gap down and then rally or something like that. You've also got support about 1860, roughly right in there. So yeah, it's basically on or near support. So I was adding to this position. And that's it. The dollar, you can see the dollar. Here's an hourly chart on the dollar. So short-term dollar futures, you've got this downtrend line here. And we made a divergent low. So here it is right there. Pretty, hold on. Okay, not sure what happened there. But divergent low right there. So that was a divergent low on the dollar, and then it rallied and started to break this trend line. So maybe a little more upside in the dollar. I would see us probably, you know, first level 107.14, and then maybe a rally up to, you know, who knows? We got some additional levels, 109 or 108.23 up to about 109.40 is likely going to be the level of resistance. So in the short term, dollar could rally, which should put pressure on the market and pressure on gold. So we'll keep an eye on that. And obviously the Fed's going to have a major factor into what's going on there. Okay, commodities. Let's go into these. No real change today. Wheat kind of drifting lower, looking a little interesting. This is the wheat ETN. It does an okay job of tracking the wheat, but the best way to track wheat is through the futures. But here's the wheat ETN. We've got a support zone right here. We're kind of starting to break it a little bit. However, if I look at the futures, I go over to the wheat futures, the trend line that I have on this one is right here. And it's not the most well-defined trend line, but you've got support there, and kind of falling right to there. So we'll see how that plays out. Also, you'll see here there's this bullish falling wedge pattern, and we just kind of reach down and tag the wedge. So I suspect wheat rallies here, and then we'll see how that plays out in the wheat ETN. But looks okay. Joe had this bullish falling wedge, and it's gone nowhere the last few days. So kind of very similar to the market. We have a breakout. It's just kind of consolidating. I think it's likely heading higher here in the near future. What else is kind of interesting? You know, soybeans rallying. So yeah, commodities still look okay for as a long trade. First Solar, this is the daily chart here, and a lot of people ask me, you know, we're seeing selling in First Solar and thought that maybe the top's end. Maybe it is. I didn't see any technical change today, so for me it just was kind of more of the same. If I go down to the on the daily chart, clear negative divergence on the daily. All right, it's pretty obvious right here. We've also got it confirming again. So you'll see here on the RSI, look, it's turned down again. So divergent high starting to confirm. And if I go to the PPO, I have to zoom in. Not quite crossed over yet. So you do want to see that crossover to help confirm, but looks like it's pointed straight down. So it definitely looks like it's going to confirm another divergent high. If I roll back out to the chart and then I go down to the hourly, we've just got this rising wedge, bearish rising wedge pattern, and no change here. We haven't broken down out of the wedge. We haven't broken out. We're just still within the wedge. So from my perspective, no change. I need to see a breakdown to help confirm that we're going to continue lower. I'm expecting it. The divergences on the daily are telling me it's coming, but we need to see it show up. So that's it on First Solar. And then again, I guess, you know, for anybody that's new, the target on this one is way down here at about 70, 78. So it's a decent sized target. We could even take the wedge, the widest part of the wedge, and that's, you know, it's getting us down here around the 200. But I think you start heading down there, you're likely going to run down into this gap. So that's our target, although we'll probably have some bounces along the way, of course. And Visa. So on Visa, no real change today from yesterday. We had a slightly, almost an even, there's just no real impulsive price action in the market yet. So can't say that we've got this one nailed yet, but it still looks constructive for a short trade. On the daily chart, you've got a downtrend here, okay? And we're just slightly above it right here, but we're above it with negative divergence. This divergence here is telling me that the probability is that this little breakout is a false breakout and it's going to be a bull trap, meaning I'm expecting some sort of impulsive breakdown or a gap down back below the trend line, probably maybe even below the 200-day, and an impulsive breakdown as the bulls realize that this breakout was a false breakout. So that's what I'm looking for. We don't have it yet, but it's definitely constructive as a short trade, and we just need to see that price action show up. JP Morgan. All right, so JP Morgan is setting up negative, setting up bearish. You can see here on the daily chart, we've got a divergent high, so there's your negative divergence on the RSI and the PPO. And we just, last week, we kind of grinded higher, making a slightly new higher high, but it's a divergent high, so I think there's likelihood this thing's going to fail. And we've got some support right about 133.20-ish, somewhere right in there. Maybe you could even, I could probably even adjust this just a little lower down to about there. 132, I got that at 132.50. A break below that, we're likely going to go lower, all right, and start to make that next leg lower in JP Morgan. So there's lots of things to watch. I think there's definitely some good setups out there, but we just don't have actionable, not all the trades are actionable yet. And I think the market's likely just in a holding pattern until it can hear what the Fed has to say. If the Fed comes out hawkish, then we should probably start to see that next leg lower in the bear market. And then if the Fed does some sort of a pivot, then maybe we have another leg higher in this bear market rally. Regardless, the rally that we're in is a bear market rally. So until proven otherwise, we definitely want to treat it as such. And I'd be looking more to sell the rips and short rallies into resistance than I would to buy the dips on especially growth stocks and things like these, JP Morgan. So that's where my head's at right now, and hopefully you guys are finding value in the content. Drop me a thumbs up, join up on the private member group, take the course if you haven't taken it so far. There's a lot of information and good value in there. Link in the description below, and I will catch you guys tomorrow.